Good morning. This is Amir, Safar, Senior FX Consultant at Worldwide Currencies. We're just going to look over the monetary and the fiscal responses to the coronavirus from the UK, Eurozone and the US. So let's just dive right in. So the UK announced just the other day that they're cutting interest rates by 50 basis points, so from 0.75% to 0.25%. Now, the Federal Reserve had previously led the charge with this, so they actually cut their interest rates by 50 basis points as well, from a headline rate of 1.75% to 1.25%. However, the ECB, so the European Central Bank, just yesterday decided to keep rates unchanged. Now, why would reducing the interest rates stimulate economic growth in order to alleviate the impacts of the coronavirus? Quite simply, it reduces borrowing costs. So when individuals and businesses need loans from the bank, there's less interest to pay, so it's more favorable for them to do so. Why would reducing the interest rates actually weaken the currency? Quite simply, it means that foreign investors don't have as much of an incentive to put their money in that country, in that local currency, for investment purposes, especially if the interest rates are so low. Now, what I would say is that most of these rate cuts were already priced into the market, so the market expected these cuts later in the month. What really caused an immediate response in the rates by the market is the fact that in the case of the Federal Reserve and the Bank of England, both rate cuts were done through an emergency interest rate cut. So it happened overnight, for example. So the timing was very important. So the market did expect it, but the timing was very important, and that's what weakened those currencies as and when those happened. Now, onto the fiscal responses. The UK, during the budget delivered by Chancellor Sunak at Parliament the other day, he announced £30 billion worth of stimulus to the economy, focusing on the NHS, so providing the NHS with as much money as they need in order to alleviate the impacts of the coronavirus. The general public, by introducing certain measures to help with sick pay during this epidemic, and also helping businesses through grants, loans, and encouraging banks to give loans to these businesses at a lower interest rate. The ECB decided to expand their quantitative easing program by 120 billion euros over the course of the year. So that means that they're going to be buying more bonds in order to stimulate the economy. They're offering cheaper loans to the banks in order to then offer businesses and individuals more favorable rates, so to increase spending. In the case of the US, there's very little fiscal response for the time being. Donald Trump is putting a lot of pressure on the Federal Reserve Chairman Jerome Powell to deliver another interest rate cut later in the month by probably between 25 basis points to 50 basis points. Economists say that the timing of the fiscal response is going to be really important, and most economists out there are saying that if they don't get a move on with the fiscal response, it might cause the US economy to go into a recession. Now, from a government response point of view, the UK just yesterday moved from the contain phase to the delay phase, so it's trying to alleviate the impact on the NHS right now, at least for a few weeks or a few months. Italy, in particular, where there are many coronavirus cases, have gone to a complete shutdown with only pharmacies and supermarkets remaining open. The US, as I said earlier, they're lagging on the fiscal response, but Donald Trump has banned travel from Europe into the US, with the exception of the UK and Ireland. So they are taking steps, but they need to get a move on with the fiscal responses. Overall, from a currency point of view, it's clear that the Federal Reserve probably have more leeway in terms of cutting interest rates again, so they can have more of an impact on their economy, whereas the Eurozone, they don't have as much room to maneuver. So hopefully their fiscal responses will be enough, but I'm sure that if it isn't enough, they'll introduce more measures as well. But at the minute, the dollar is still that safe haven currency, because they have that room to maneuver, because they can cut interest rates again by another 50 basis points. they're seen to be in the best position to deal with the coronavirus outbreak.